Hi, everybody, and welcome along to our Sunday Market Analysis Show. My name is Paul B. I'm the founder of Actions to Wealth Online Trading Profits. I'm here to introduce the team today, and I just want to remind you today we're going to do an intro here, and then each of the team will come in 5-minute slots, and you can watch the whole thing, or later on today, we'll cut it up and publish it in small amounts with a heading so that we can make sure that if you want to just watch the oil stuff, for instance, you can just watch the oil stuff. If you just want to watch Julian, you can just watch Julian. So each week you'll be able to watch either the entirety of this, or you'll be able to pull out the little bits that are particular interest to you guys. Hey, those that are saying hi, welcome along. Nice to see you guys. Nice to have people in the room. And to be in the room, you will need to be here when we do this live each Sunday. I imagine there'll be a little bit of jiggling of times in the next couple of weeks. We've got New Zealand Daylight Savings next Saturday night, which means there'll be a 4-hour difference between New Zealand and Singapore. Gosh, I cannot wait for that. That does make life just a little bit easier. Okay, but let me start off today by introducing Julian, who's going to come and talk about the macro markets for us. He's the mentor to our trading team, 30-year professional trader, worked all around the world, and is going to give us his view on the markets. Julian, over to you.
Hey, Paul, how are you? Hello, everybody, wherever you are in the world. And look, welcome to, I guess, another trading week. It's going to be an interesting one because it's the Easter weekend. And as a result of that, we've got some people may say there's normally it's a quiet time that we go into around April time, but I always see this as being quite an interesting and exciting area, the end of the quarter, and also normally is a time for a lot of trend changes around the late tail end of March and the first couple of weeks of April. So we're on the lookout for some trend changes. Now, what do I mean by that? I mean longer term fundamental shifts. So a couple of things I'd like to talk about today to highlight with everybody. For, I believe, the best part of now about 4 months, I have been quite bullish on the US dollar and quite bearish on the currencies overall. Now, some of them have performed okay, some of them haven't performed okay, but let's think about the euro is a really good place to start, and maybe the Swiss franc as well too. And so looking at those core European ones, I am beginning to be a little more bullish towards them, right? So the US dollar rally may be coming to an end in those two. So how is that going to play out? Well, it's going to play out, I think, if we see a movement in interest rates. So for the last 3 or 4 months, we've seen US interest rates rising, and I'm expecting that at some stage over the course of the next 3 to 4 weeks to stop and maybe reverse. And when that does happen, I think there's going to be a shift in that US dollar dominant theme that really has dogged the euro for some time. In my mind, the euro never made it to 125, which was frustrating. But it also means that if the euro does go up again, clearly the next leg is going to be up to the 135 point. Now, why would that be the case? Why are people going to start to think about the US dollar to go down again? Well, it's because they're spending quite a lot of money. You know, we can go through the economics. You guys all know this, right? A big fiscal stimulus program, lots and lots of government spending. And also a rising interest rate market normally tends to lead to the currency to appreciate. That's sort of classical neo-economics, right? But here we are again in the situation whereby interest rates have gone up quite substantially. I'm not sure the Fed wants to see long-term interest rates much higher. And at some point, you only pull the piece of elastic as, far enough. Short-term rates are still flat. So we've got that piece of elastic being pulled further and further and further and further, right? At some point, it'll have to snap back because people will take advantage of that yield curve difference, right? So 10-year rates up at 1.6 and short-term rates still stuck around 0 or a few basis points. At some point, that's quite an attractive spread for people, and they'll start to arbitrage that difference out. So in other words, flatten the yield curve. Okay, that's called a bull flattener in this case. So I think that could be, I'm not talking about a big move back down in interest rates in the long end. I'm just talking probably about a stabilization and possibly a drift lower. That's the sort of thing, I think that's the catalyst, is all you need for the currency movement to start up again. So be on watch for that. I think that could be quite important. If the unemployment numbers are as disappointing as the inflation numbers were last week, the PCE came in lower than people thought in the States, and that's going to give people pause for thought, right? We've seen a few of the economic numbers come through now a little bit weaker than people are expecting, so we've got to keep an eye on that, and it may mean that unemployment is as sluggish, right? So that's rates longer for lower. lower for longer. I mean, that's what Powell said, so we might respect that. And when people think about it that way, then they'll probably end up thinking those 10-year rates are a little bit too high at the moment. So that's a key driver for me over the course of the next couple of weeks. I'm beginning to change my view, but that's not held everywhere, right? So you might well see a different pattern unfold in some of the commodity dollar currencies, the Aussie, the Canadian. The Canadian certainly technically still trades a bit of a dog. Well, the US dollar CAD rate trades like a bit of a dog at the moment. It still seems like it wants to try and go down. We'll see how that works over the course of the next few 2 or 3 weeks or so, the next few days. Really important, could be a turning point for the Canadian dollar. Again, didn't quite get to my target levels around the 118 mark. So maybe we need to see that a little bit lower, and that might well end up proving to be the case. But if it doesn't, and it starts to head back up again, that could be interesting. So there's some different forces at play here, right? So when I'm talking about the US dollar strength starting to wane, that's a euro and a dollar Swiss type of theme, if you like. The commodity currency is a little bit different. They would require oil to go down, I guess, and some of the steam to be taken out of the commodity market, because at the moment, as you know, commodity prices were a lot higher than they were last year. Call it a supply constraint, call it a secular commodity rally. I'm not quite sure what it is, but obviously prices are a little bit higher than where they were 12 months ago, for sort of obvious reasons, I guess, with the COVID. But I think there's more to it than that. I think there's some supply problems too. And that's going to be, I think, the key theme, is that have those commodity prices run up as far as they can go. And if that is the case, then again, we could see some weird price action with regard to the Canadian dollar and the Aussie, and also the Kiwi as well too. So there's a few things going on. People in different currencies moving. We saw dollar yen break out. That looks like that's going to continue. That's got to have that 110 is so exciting. We're right close to it. That's got to go, and maybe up to that 111, 112 area, which I think was pretty key. With 113, I guess, is staring us in the face as well too, which are the key levels. So there's a few key levels coming up in dollar yen, something to think about, and I think keeping an eye on those before possibly then that turns again. And so the driver often behind dollar yen is movements in the stock market. So again, if the stock market comes off, then we could well see some movement in the dollar yen down, with the yen strengthening, right? So there could be some correlation between some of the movements, but for different reasons. And that's the key real point I'm driving to at the moment. Keep a lookout on what's going on and what's driving these currency pairs to get a real handle on the way that overall market direction is going to be going. We know that some of these currencies have been pushed to an extreme. Currency pairs have been pushed to an extreme, and the question is where they're going to break and bounce back again. So for me, I think that's probably it. No, one more thing as well too. So here's the interesting thing about inflation. Everybody's been talking about it recently. So there was a study done this week in the States saying, how concerned are you about inflation in the US economy? And over 77, I think, % of people who were surveyed were quite concerned. What was weirdly interesting about that was young people appeared to be more concerned about it than older people. I'm not quite sure what that means. So but let's just go with the fact that people seem to be very concerned about it. And inflation is often at the beginning of the inflationary cycle a expectations theory. So if you believe inflation is going to go higher, often it seems to sort of like eventuate, and that sort of adds like fuel to the inflation fire. Now, people appear to be thinking that way now. But this is early stages, and it can all go in the opposite direction quite quickly. So, a big sell-off in commodities for one reason or another, the world getting its supply chain back into gear again would be interesting. Maybe stop running boats into canals would be a good start. But the thing for me is, I think it's important to bear in mind that if you're thinking about the inflation trade as being just getting started, I think you've got to look at that from a very broad cyclical sense. And I'm not sure you can trade that. If you're talking about the inflation trade being alive and well right now and driving markets and have people thought about it and positioned for it, then I think that's well and truly the case. So therefore, there's another argument saying, well, actually, if everybody's got this, then what's going to happen next? Who's left to buy the inflation trade, right? So do we see things starting to change there? And that would have implications for the likes of the cryptocurrencies and also some of those core commodities like copper and platinum, which have been doing incredibly well, right, over the course of the last few months. some food for thought there about the future. And I like to do this at the end of the quarter, have a little bit of a roundup about what I'm thinking about key themes. Hopefully that made sense to people. Paul, back over to you.
Thank you, Julian. Much appreciated. Some great insight there from Julian. Always interesting to get the end of quarter roundup from you on the macro stuff, Julian. Look forward to a little bit more next week, and of course for you and me, an hour earlier for us next week, which will also be really nice as well. Next up, we've got Alexis, our fundamentalist, coming in and giving us a different view on fundamental things. It comes up from a different way of looking at stuff. Alexis, please jump on camera, jump on the microphone. We've got 5 minutes now for Alexis. Here you go.
All right. Hi, guys. Yes. All right. So I think I'm really happy to go after Julian because I think we have a very similar stuff happening. And again, I think my fundamental focus is on interest rates. I'm just going to do a quick share of the screen to kind of explain where that comes from. My attention now is I am looking forward to the unemployment rates that will be coming out this coming Friday, the non-farm payrolls, because there is a lot of speculation about when interest rates will actually go up, and I think we are. I think it will ride on this non-farm payroll that's going to come out. So if this is actually from Trading Economics, and I have been trying to figure out how to get this charts to overlay, but I couldn't. So we'll just have to look at it like that. So on the left side here is the unemployment rate, and on the right side is the Fed funds rate. So what I was trying to determine is what is the comfortable rate of unemployment that the Fed will be comfortable with, to say that, okay, unemployment's pretty okay at an okay number now, let's increase interest rates. So I think I'm only focusing on the latest pops. So we have here somewhere after about 1989, 1990, you can see there was a slight pop over here where the unemployment rate was about 5-ish%. All right, so I would say that between 5 to 6%, I think this little wiggle over here would be some sort of a benchmark the Fed will look at to say that, okay, they're comfortable with these numbers. And if you notice, somewhere in, I think, 2005, 2006, which is again somewhere around here, where unemployment rate came down all the way to this area, there was again that slight pop in interest rates. And most recent, of course, is 2016. So unemployment prior to that was way over here, and the moment it came down to about 5-ish%, I guess that was when the interest rate started going up a little bit until, of course, COVID hit, and then that's where we are at now. So where is unemployment figures right now? They are at, let me just clear the drawings and go back to this. Okay, so unemployment figures, this is the last 5 years. I'm just going to 1 year. So this is where the unemployment figures are right now. It is somewhere about 6-ish, slightly above 6, 6.2, 6.3. So it has been steadily going down. So I think that's why the anticipation of interest rate pop is there. But how far below 6% are we looking at? If the Fed is comfortable anything below 6%, then I would say that based on this coming Friday's non-farm unemployment figures, we should see a pretty interesting decision being made. But if unemployment still floats around above 6%, then I would say maybe the next report would give us a better indication. We'll probably sit on those low interest rates for now until we see a little bit more improvement in the unemployment rate. So I'm still hunting down for more details on this, but I think the attention now is really on when is the best time to increase interest rates. And of course, I have been bullish on the on the dollar as well. What I am looking next is actually this dollar. I'm actually looking at the dollar moves. I'm still bullish until interest rates tells me otherwise, but it's a little bit overextended right now. And my chart for next week is actually the pound Swiss. I know it's a little bit far off from the dollar, but this is the I think this is the nearest chart that I'm looking at, and it's a little bit more in line with what I was looking at last week, which was weakness in the Swiss. A couple of people actually asked me why I prefer the yen to the Swiss, and the reason probably is here, flashing you an article or something like this. So this is the global currency composition by FX reserves. The data is from the IMF, and this was data all the way to 2020. So if you're picking a risk-off currency between yen and the Swiss, this is the reason why I prefer the yen. This purple bar here, you can see the yen at least has a bigger volume as compared to the Swiss, which is, I think it disappeared somewhere on top. You can barely see the tiny little red line there. So this is my reason why I prefer the yen to the Swiss as a risk-off currency. And with that in mind, and with the Swiss statistics, doesn't seem as fantastic, and there has been talk on the pound Swiss on what they are going, the Swiss on what they are going to do with its interest rates. I am in anticipation of that as well. So my target next week is actually the pound Swiss. Two reasons. We have I spoke about the pound when it was pound Swiss when it was testing these nice low levels here. It looks to be another consolidation here, so a little bit of technical coming in, and I am looking to trade this move. It's either to the top or the bottom, depending on where it goes. I am of course looking for a breakout of this, which will make it more exciting because the breakout would mean it will go a longer distance. But I also am wary that this is a very nice horizontal level. But I am waiting for the move that comes after this consolidation. That's all I have for now. Thank you. Back to you, Paul.
Cheers, Alexis. Thanks for that. Most interesting. Thanks for that, Alexis. Interesting stuff there. And we will wait and see how the Swiss franc and the dollar yen do run out as reserve currencies or work in the next few weeks. Next up, we've got Ash talking about the data that moves markets. Ash, are you ready to come in?
Certainly am, mate. Yeah. Let me show you my screen because it actually leads us quite nicely on to the yen because the yen is probably the most interesting of the COT currencies. So I'm looking at the COT data here. And there's not been much in the way of further commitment when it comes down to the COT reports from last week. So really the COT report, from what I've read so far, is kind of tempering a lot of the excitement about any potential movements in many of these currencies over the coming week. And it's kind of suggesting that we may well have a quiet week coming up. Now, obviously, it could be completely out of sync. But from what I was reading from the COT report, it was suggesting that there's a distinct lack of commitment, and considering it's called the commitment of traders, it's quite ironic that there is a lack of commitment. But let's have a look at a couple just to show you what I mean by that. And I want to start with the dollar index here, and we saw that the index was quite elevated for quite some period, during the start of the year. And we have had that move in the dollar, but we're seeing the index just start to, hasn't drifted down. It came down quite significantly over the last couple of weeks, over the last couple of sessions. And you can see down here, if I turn the net off here, then you can see that some of the selling has actually come back into play with the dollar, and some of the buying, this green line here, has just started to ease off. So the bull run in the dollar looks like it might at least hit the brakes in accordance to this. Now, if we have a look at the yen as a comparison, then we can see, look at what's happened here to the index. This is the commercial traders index. Now, it's not quite in the extreme level that we'd really like to see, which tends to promote some real commitment of buying, but it's getting there, and it really has started to pick up. And again, looking back down here, if we take the net index off here, we're seeing the selling pressure really come off, of the yen, and just a little tick up with the buying pressure. So we can see that this move has really been created by people coming out of positions and selling, rather than there being a huge influx of buyers. But it's quite notable that has changed as significantly as it has. Now the other one, and so in actual fact, before we move on to looking at anything else, let's bring that into a price chart, because what we have seen with the dollar yen is a real pickup. There's been some genuine buying of the dollar yen as a pair. So if we look here, we can see that there has been some genuine buying. It's broken again out of a range here. Now, looking at this on the monthly, does look like it could potentially be hitting something of a resistance area here. So because of this, and because of what the COT data suggests, it's really kind of intimating that going long dollar yen at this particular point would probably not be the wisest move. You know, it probably would be actually quite a bad move at this particular point in accordance to the COT data. Now, the seasonals on the yen, which could actually play quite nicely into our hands, don't really pick up significantly until around about the first week of April, first to second week of April. That's when we see a really, a genuinely bullish move on the yen season in accordance to the seasonals. So that could give that index just a little bit longer just to start picking up, get back up to near the kind of 80 to 100 mark on the index, which would start to provide us with a bit more clarity that there could be some upside. So well worth waiting on the yen for a couple of weeks, but maybe watching it. The others haven't been, as I say, quite as significant. Now, the other one I want to quickly look at is oil, because we have seen some interesting price action with oil. We had a bit of a boost in inventories, and really that should have been quite bearish in oil. And considering where the price action has been, where the price of oil has been, it tends to not take much to tip this kind of stuff over when you see such parabolic moves. But look what the index is suggesting. It's just suggesting that we haven't really got any significance one side or one way or the other, and there was some selling pressure recently, but that's just started to tip down a little bit, as has the buying pressure. But that's just really saying, hold fire with making a decision really with oil right now. Maybe let things pass a little bit, and let's have a look at what the chart is suggesting here as well. And what we saw towards the end of last week, which I thought was quite interesting, was a big move to the downside, and then it started to stabilize, and it's really started to do that again. Yes, we've got this head and shoulders pattern starting to form. The Suez Canal story would be the one red light on trying to sell oil here, with a complete lack of supply of so many things. Really being stacked up, $9 billion a day in global trade, then and also some of those shipping companies are charging actually quite a lot more money, and this is where we start to maybe get a bit more of an inflation, almost an unplanned inflation firework. And I think that this is going to be really interesting to watch. What's that going to do with prices globally in many commodities? But I do think that we need to really be on the lookout for something like oil. The head and shoulders pattern does suggest downside, but when you get that lack of supply that could be coming through, and the price action which initially tanked and held quite notably, it doesn't really suggest that we should be looking at a downside in oil with any real safety. I mean, certainly, trying to buy oil up here would not be technically the best thing to do, and technically, it does look like it should be a short. But we've got to let probably some other news just to come through about and just check out some other points of data before we can be a bit more comfortable to say, okay, now maybe we have reached a bit of a top. Let's go on the short side. So really, the main message for this week would be one of caution, and maybe even one of if trading is done at all, then it might be wise to be light on positions. And I will pass it back to you, mates.
Cheers, Ash. Thank you very much for that. Always good to know when we should be looking to get into markets and when we should be looking to be a little more careful with our capital. So it does sound like a little bit of care due this week, and hopefully a bit more volatility coming back in next week. Thank you very much for that, mate. Much appreciated. Look, next up we have got Ainslie talking gold, and looking forward to having Ainslie back in the show. She was away last week. Ainslie, are you with us this week to give us some insight into this gold market?
I am. Unfortunately, there's nothing exciting to tell you at the moment. It's just been. I'm going to share my screen. See you, Ash. Let's go. There we go. Okay. During the week, we've been looking. My left-hand chart is a 4-hourly chart. The next one to the right is a daily chart, and then we've got a weekly chart. and obviously monthly over tucked on the side. But we've been in this crazy consolidation now for quite some time. It hasn't really done it justice as far as what's it doing, how's it responding to the US dollar. The gold is highly correlated to the US 10-year Treasury bond yield. It's also traded against mainly the US dollar. And even though we've seen volatility in both those areas, gold is being caught in, well, we could call it a love triangle if you like, but you can see there is no traction. It goes in one direction and then it immediately reverses and comes back in. And this is where we have seen, I posted this just before it went to the high on this bar here in our trading group to say there is just nothing to trade here, guys. It really isn't. And then I posted, then we've got this going to here. It's come back down and it's just sat. It just sat there. It's just sort of pondering between the pivot, which is a weekly pivot, so it's a really strong pivot, and a weekly support level, and it's just sitting there. Julian has touched on what we are looking at going forward to a waning in the US dollar as far as it stopped that, and yields are looking a bit high, and we're looking for that to come off as well. If I can get both of those things happening at the same time, and perhaps a bit more interesting gold as a resource, that would be great. I would like to see us bounce off this level down here and move it along. Commitment of traders report. Ash has just done oil and dollar yen, but if you actually also look at that on the, hang on, I'm just trying to pull up. No, it's all right. I will just go back to my other chart. If we just stick with what was happening on the commitment of traders report, we're starting to see a change from the commercials going short to the commercials easing off, going short to a potential going long. So if we go with that thesis and sit tight and wait, I think we could almost cross our fingers, get out of this revolting consolidation box, which has been going on for quite some time. The other thing going on a technical point of view, and I'll just make this a little bit wider so we can see, is you look at a monthly chart from the top of 2065, I think we got to, or 2072, from a low down here in 2018 of, what was it, 1161? Got this massive bull flag happening here. This is on the weekly. It's a really big picture to be looking at, but that's the best part of $915, by the way, from there to there. If this does continue to go to the upside, so let's look at this on a very technical basis, by the way. We've got a ring low, bouncing off the 100 EMA, off a monthly support level, and the bottom end of a channel. So this area of confluence is actually really, really strong. No doubt, no wonder it did bounce. This is why I'm looking for, if we get some traction and it closed this week over 1750, I'm hoping that we're going to have a combination of a few other things with the unemployment rates and everything else coming out during the week that will play into this technical setup that we're seeing now. Like I said, it's a weekly chart. It's a big move. It's not something that we can go, oh, great, we'll go along tomorrow. We need to get out of this consolidation box happening over here on the floor. You can see just happening here, just bouncing. It's not even funny anymore. I've lost all my fingernails just drumming them into the table, waiting for something to happen. But this is trading. Sometimes it just doesn't happen. You've got to be patient and wait for the big moves. So that's what I am looking at the moment on gold. I'm waiting patiently, hoping that we can do something more than inside bars and followed by outside bars, and that we can go somewhere. So hopefully, fingers crossed, guys, that we don't have to wait for too much longer. Over to you, Paul.
Cheers, Ainslie. Thanks for that. I think we all know in trading, the longer we stay still, the bigger the move that follows. And for markets to range for long periods of time, and gold's done this before. It's not unique. Perhaps it's unique at this time of year, but it's unusual at this time of year. But you would expect at some stage we are going to see it come out and bounce away in some form of direction.
Yep. I'll be back for oil later.
Thank you. Rightio, next in for us today is Shukri talking about crypto. Had another big weekend. This man, I think he's presented 5 of the last 5 weekends. Done Crypto Moon. My feedback on last week was really strong. I'm sure it'll be the same this week, and he's going to give us his unique insight on the crypto markets. This is not a man that just buys and sells some Bitcoin. This is a man who understands the market and teaches people how to make a lot of money from it. Shukri, are you with us?
Yes, and let me go to the screen and show you where we are now.
Mate, I'm thinking about giving you next weekend off.
This weekend is so exciting and it's crazy. But going through the past 2 weekends, I've realized something. Here's Bitcoin, it's going here. We're about to enter April. But let's take this out. That is irrelevant. I want us to put our brains together and adjust it, because there's something going on here. And we are literally going to where no man and woman has ever gone to. See, I didn't forget women, okay? I'm not discriminating women. We trust women to bring us wherever we want to go. Now, here's the deal. Look at this. This is the tulip mania. Okay, that went up very fast. This is Mississippi. This is Bitcoin. Bitcoin 2017. This is Bitcoin now. This is the most craziest drive ever. But let me tell you, and let me bring this chart down. Let me tell you now. Oh, wow, that hit. I gotta bring, oh, look at that. That's high, right? Let me tell you that there is another mania going now that's even higher than this. This is Moon. This is Jupiter. It's higher than this. I cannot even draw it. Let me show you the example, real life example. That is NFTs. Let me show you real numbers, cryptos. We're about to realize a 15,000 airdrop, which took 3 years. NFT, USD 2K in 4 months. Is that good? Yes, it's good. But you know what? It's 27,000. It's not even 15. It's 27,000 in 4 months. Oh my God. Capital to start, cryptos, 3 to 5K of any currency. I would say it's US 1K. Let's keep it simple. NFTs, US 230. It's not a lot, right? Wait a minute. It's not US 230. Sorry, guys. It's only US $23. We have a problem, Paul. Now people are going to start asking, if it takes like $23 to get into NFTs, how much are our fees? Like 22 bucks? Okay, I'll let Paul resolve this. Next, how much can you make? These are proven ratios, okay? These are real numbers. They're not even made up. Cryptos, this is about 6 months. US 100,000 to US 3 million in 6 months. Possible, done, okay? Can do. NFTs, US 100,000 to US 6 million in 6 months. Sounds right, but wait a minute. Guys, it's US 60 million in 6 months. Real numbers, okay, real numbers. Next, we remember the days that Simon Williams, hey, that was 1 month ago, right, Paul? We were saying that, hey, he went from 620 to US 13,000, US 20,000, or whatever the number. Wait a minute. His NFT crypto has just gone from US 620 to 133,000 US dollars in 3 weeks. And guys, this is why I want you guys to put in your reminder or YouTube or wherever. Don't miss the Crypto Moon Show on Monday, 7:45 p.m. We cover cryptos. Wednesday, we are going to cover NFTs. So don't miss that. Put it in your reminder. That's all I have to do. Update your calendars, please. We are going to where no man, woman, animal, whatever, whale has ever gone to.
So Simon, 620 US has turned into 133,000 US in 3 weeks, right? Nice. And these are not unique stories. Still 100,000 to 60 million in 6 months seems a lot, Shukri.
I know. It is insane.
Are you using this ratio? Or where did you get the ratio from?
Huh?
Where did you get the ratio from?
There is a site that tracks this. This is the #1 NFT site.
Insane, eh? Insane.
And those guys are going to go on Thursday. We have a special class, 1st April, and they're going to go and I'm going to teach them how to use this. Guys, this is not April Fool, okay? I know you might get a mail from me and we're going to go today. This is not April Fool. Save the mail.
So 1st of April, for those that have done Crypto Moon, or for everybody, you're going to do something on this?
Crypto Moon, yes.
Fantastic. Those boys have got some great value, like $1,500, guaranteed $1,500 of airdrops and all this stuff thrown in. Honestly, amazing program, mate. Thank you very much. Thanks for coming in, mate. And honestly, have next weekend, mate. Do enjoy. I know you've got another one in a couple of weeks, but boy, have a weekend off, spend with the family, mate. Thanks for your help in the last couple of weeks. Rightio, guys. Next up, we go from gold to black gold. Ainslie is back to talk oil with us. Interesting market, oil. I still like it long. Ainslie, how about you?
Look, yeah, I do. It's not what we wanted for the last couple of weeks, but I guess we would do a bit of a pullback, won't we? Really, Paul. As we can see here on the 4-hourly chart, look at the volatility. I think Geoff would be really, really, really happy with what we had here, and it's just been really fundamentally driven this week. So as you can see, we've had that movement within a tight range. And initially it was the extension of the lockdown and the cessation of the AstraZeneca being administered because of blood clot concerns and all the rest of it. And then there was a bit of a blip back up again on some optimism with I can't remember what it was. It's just been there's just been a lot of stuff coming back in, and then we had inventories that were taking it back down again, and then we had the sewer story that was pumping back up again. It pumped it straight back up again. And what that was with the sewer situation was 10% of the world's oil, because you just sort of think, oh, okay, there's a lot of trade going through, but 10% of the world's oil is transported through the Suez Canal. So when they're just sitting there and the prices are actually, the cost of transportation is going through the roof, which obviously is passed on, and there will be penalty clauses, etc. But, you know, as Julian said, very unfortunate to have a slightly large tanker go sideways. 20,000 cubic meters of sand they have to move to get that little puppy back floating down the stream again. So that's quite a bit there going on. But we've got this huge consolidation. I know Ash was talking about a head and shoulders, but we've also come back down. If you look on the daily, we're back down in this neck of the woods where it's a really, really strong level. So we just have to see how this goes at the moment, because a point of contact with a good strong consolidation, as we've seen with gold, the move normally out of weeks and weeks and weeks of consolidation with gold, as opposed to pretty much this week that we've had with anything that slightly moves the market. Oil's hanging on to that and being very, very sensitive to a move, but within constraints. So that's what we're looking at. I'm looking for a bit more of a move to the north side. We've got an OPEC meeting happening on the 1st of April, and fingers crossed that we're going to have that whole keep the restriction happening on the quotas. They've been talking about lifting those. But as I said, common sense has really prevailed over the last couple of OPEC plus meetings, and that'll help that move it along. So that's what we're looking for. 1st of April, end of the month. Seasonals, we're looking at a bit more of a consolidation, and then April on a seasonal chart, we're looking at a tiny swing up before a bit of a move back down again during the rest of the month. But that's what we've got to go with. Like I said, just be very, very, very wary of trading oil at the moment. Very sensitive to fundamentals. As you can see, it's just moving it from one side of that range to the other really, really quickly. So hold on to your hat, basically. And that's it for oil. Nothing terribly exciting. And no, I did not make $60 million on oil this week, month, or even the last 6 months on oil. But we'll see how we go. But just be patient with this one.
Yeah, I agree. I did get down and test my entry area a little while ago, but I do remain in the patient mind with oil, looking for end of the year to see where it's going to be. And it started quite a long seasonal move up, isn't it, for oil? Thanks for that, Ainsley. Much appreciated. Next, we've got Lloyd with Currency Strength Index. So many people talk about the dollar index and the holy grail of the dollar index, but you can do that with every currency. The dollar index is a basket of currencies versus the dollar. Lloyd's going to talk about currency indexes, so a basket of currencies versus the Kiwi, a basket of currencies versus the Aussie, etc., and give us an overview from the baskets of what's going on in the markets. Lloyd, are you with us?
Hi, Paul. Yep, I'm here. So let me grab the screen. Okay. So here we go. All right, so just an update about my trade from last week. Wait a minute. So there we go. Cat Swiss, we actually had a very nice trade. I didn't actually exactly bounce on my horizontal level. So nevertheless, it's still a higher low for me. So I already got my 2:1 trade. This was a nice setup for me. Euro yen. Yeah, Euro yen did actually set up for me last week. Yeah, so it might actually possibly set up this coming week. But as of now, I'm actually not really that interested anymore. And I'll show you the reason why. So overall, when we look at the currency indices, you can see that the dollar index is actually on a very strong rally. It has actually broke through the short-term horizontal level that I had on my chart. Yeah. So with that in mind, I'm actually going to be pretty bullish about dollar until it reaches 95. So we'll see how that goes. Yeah. So previously, I thought there's some hesitation. I'm being very cautious about dollar until it actually gets completely rejected by the horizontal level or it breaks through. So now it has shown us where it wants to go. So my next target for dollar index will actually be at the 95 level. Yeah. So for probably in the next 2-3 weeks, I'll be pretty bullish about dollar until it shows otherwise. Now, pound. Now, pound is a very interesting case. I'm bullish about it, but I would say I'll be cautiously bullish. Now, if you look on the weekly chart, which is where I am, you can see that 140 is a pretty strong level from the past. Price did actually bounce off quite a few times. Yeah. So, and similarly to dollar index, you can see that it actually consolidates for quite some time. So let's have a look at the daily chart. So you can see that price actually consolidates, broke. Now on Monday, it's going to be important for pound. Now, if it actually breaks, it actually breaks already. So if there's a bearish bar that forms, then for pound for the following week, this coming Monday, I'll actually be bearish about it. Yeah. But if it actually goes back inside into the box, then I'll be bullish for the rest of the week. Yeah. Simply, I'll classify it as a false break. Then it does have leeway to go up to 140 again. Yeah. Very small space, but as of now, this is my outlook on pound. Really depends on Monday. Yeah. So if Monday price action against is a bearish engulfing bar or high test bar, then I'll be bearish about it because it simply just retested the range low. Yeah, but if it actually breaks back inside, then this will be a false break, and I'll be bullish about it. So keep a lookout for pound. I think it will be an interesting opening week. Now Aussie is again on a weekly chart. It's still pretty much stuck in a range. I'm primarily a trend trader, so I'm really not interested in Aussie. But any of you who are trading in a range, I think you can actually attempt Aussie. Now Kiwi, previously similar as Aussie, it has actually in the very long, for quite a period of time, it's been in a ranging, but you can see that it actually broke below already. Yeah, so let's have a look at the daily chart. Yeah, so you can actually see that it actually gaps for the dollar, for the Kiwi index, and now it actually retested $70. Yeah, so for the coming week ahead, on Monday again, if I have a bearish bar, then I'll be really bullish about Kiwi. I have no idea why it actually has such a gap, probably due to the Suez Canal accident. Yeah, but if that's the case, then I will be happily shorting Kiwi if it's give me a bearish indication on Monday, and Tuesday I'll happily jump in. Yeah. So keep a look out on Kiwi also. So Kiwi and PAL, these two will be interesting pair to actually for me to keep a look out. Right, CAT, now I'm starting to be bearish about it. It's being rejected nicely over at the 80 level. You can see from the past, this is a pretty good level to be shorting it. Yeah, so all I need is some cyclicity from the other pair that's being paired against it. Then possibly it might actually drop short-term level actually all the way to 76. Yeah, still quite a fair bit to go. Euro, you can see that on 120 in the past, very nice level. It did broke up a few times, but it didn't actually sustain for long. So now you can see that price again, as history has indicated, it broke, came down, retested, and we have a bearish bar. Yeah. So just going for the right, I think it'll be bearish, as what the chart indicated. Yen and Swiss, these two being the safe haven currency, is looking very, very similar. Yeah, you can see that both have very, very bearish bar from last week. So I'm going to be bearish about it. So with that in mind, this is my ranking for the week. Dollar and pound, I'm going to be bullish. Again, pound is going to be subjective based on Monday's bar. The safe haven currencies are going to be bearish, and on top of that, euro also. So with that, what I'm looking to trade is actually euro pound. So let's have a look at the H4 chart. I'm waiting for price to break this horizontal level, a retest, and I'll be happily shorting it. And then next will be dollar Swiss. Bullish about it. You can see that price actually break the previous high, waiting for sort of a retest. Then I'll be happily going on a long position. Yeah, so that's my outlook for the week. That's all.
Thank you, Lloyd. So, Lloyd, do you trade this stuff on your own? How do you use this information?
I mean, the simplest way is just by simple price action and horizontal level that's on the currency indices. Usually, I use whole numbers. You can see from my chart, 98, 95. Based on the price action that interacts with this level, I can actually plot, or I can actually suspect a reversal at this level. Yeah. And then for trend trading way, just simply look at higher high and higher low. Then I will just simply trade the strongest against the weakest, and then the second strongest against the second weakest. That's how I actually approach this.
Thank you very much for that, Lloyd. Fascinating stuff. Much appreciated.
Okay.
Radio. Now we go on to standard technical analysis with our great friend Geoff from Tasmania. Geoff, are you with us?
Good evening, Paul, and good evening, everyone. Yes, I'm here and willing to share what I feel for the week upcoming. There's a couple of things that I'm looking at in particular. There must be a bit of a delay, but let's get through that. First thing I'm going to look at is US dollar, Canadian dollar, and it's very clear to me that in the longer term we are looking at this scenario here. That's a massive double top and probably the most dominant chart feature that I see on this particular chart. And therefore, ultimately, I'm looking probably for price to get down to this level here, or around about the, what is it, under parity anyway. Let me put it that way. However, I want to point out something, and that something is that these particular chart patterns on US dollar, Canadian dollar are very, very relevant. I won't call these are in double time for whatever reason. I don't know why that would be the case. But if you take a look over time and you see things like double top sitting there, bang, there's a double bottom sitting there, bang, there's a double top sitting there, bang, there's a double bottom sitting there, bang, and now we're presented with probably the granddaddy of the whole lot, the double top sitting here on US dollar, Canadian dollar. But that's more of a longer term picture because we are on a monthly chart, don't forget. We've also got a double bottom sitting here right now. So pursuant to that, I feel that we have a very strong case to trade this long at the moment. Now, where we're likely to go to with that is, I won't say anybody's guess. You can probably use horizontal levels to work that out there, or even the top of the range that I've got. But I'm more than willing to take on board a long position at the moment based on the bottom of that range and that double bottom that we've seen. You can see the rejection of that level, which is what, around about 125 there in the last month or so. So let's drill that down. And to be honest, if you're willing to have a look at that candle there, I think you could do worse than buying right on the top of that bar a little bit, give it a little bit of space, because you do have a horizontal level above you, and putting a stop loss underneath there, taking profit maybe at that level and seeing how far we can go up here before ultimately we get a lower high, maybe in that vicinity. And then I think we can just smash that and trade it short at some stage. We are, of course, seeing a rally in the US dollar at the moment and a breakout in the last couple of weeks. I think that's very strong. I said that last week, and I think the dollar has a little bit more in it yet, maybe up to there for dollar CAD. So that's dollar CAD out of the way. I'm glad, because I'm not a dollar bull, as most of you guys would know. But at the moment, I see momentum in that particular currency, and I don't see that stopping anytime soon. Moving on to my second, and the next two of these currencies are going to be very, very similar. Euro Kiwi is one. I'm looking, actually, I'll go to the monthly chart first. The monthly chart, once again, is in this ascending channel and showing me a rejection of that level. There's even a horizontal level going through there as well. So my tendency for analysis is to the high side. Yet if I drill down a little bit, I can see that we've come to, I'll say, a potential turning point. We've got a little bit of a trade line coming through there on maybe the daily chart is more pertinent than the weekly. And that's very clear to me that we've had a breakout, and we spoke about these two bars here, again, going back to the weekly chart. That's probably why I was on it. That was a big rejection bar off that, off the bottom of that ascending channel. And it was very, very clear to me that there would be a bounce point there. Getting a hold of it, of course, is another story. We've since had this big follow-through bar. And I want to compare this with Euro Aussie in a minute, because Euro Kiwi has absolutely smashed through it in the last week with that big bar there. When I say smashed through it, I mean the top of this range here, which was in evidence with these two bars here. We got the higher low, and away it went. We were watching this very, very closely on in our Trading Buddy show. However, at the moment, what we don't have is any sort of retracement back to that breakout level, and you can see a what do you call these things? A resistance trade line. You can see that very, very clearly there. It has been broken, yet we've come back underneath it. This is an absolute classic potential scenario here, in that we've had a breakout, we've had two bars of consolidation, we've come back underneath the trade line, and I'll be very, very keen on Monday and Tuesday, well, Monday and Tuesday, yes, if I get a retest of that trade line with a bullish decisive bar, in particular if it came back to a level such as there, even engulfing that bar would be fine. I'd be looking to trade that short underneath that bar. I would be thinking that's a short-term play, however, and once again, if I go to my pen, I'll be thinking this level here. Resistance here, support here. I think that's an excellent place to find a long. Again, with a higher low, based on these two bars, higher low, sorry, higher high, higher low, higher high, higher low. I think this is in a great position to reverse. I've got no idea why the Kiwi is as weak as it is at the moment, but it has shown those signs, and I'll be more than willing to take that long, maybe up to this level here, maybe even beyond up to this level here, around about the 1.79 mark. So I see that as a potential upcoming trade, but looking at tomorrow and Tuesday, I think if we do get that bullish bar there, I think there's a short on. If you get the right entry in a nice little, let's say 30, 40 pip bar, you could make something out of that, then look for the long at that point. Now, Euro Aussie, very, very similar, as you would imagine, given that the Aussie and the Kiwi are both commodity currencies and the Euro is not, is very, very similar in that we are in an ascending channel at the bottom of it, of course, and we're looking for that bounce long. The charts are very, very similar again to to the Kiwi. Nothing much different there. We've had a little bit of a double bottom here, signifying that we can go long. I'm happy with that. Yet, what didn't happen, remember those 2 bars on the Kiwi, Euro Kiwi, bang, bang, and then we got a big follow through. Didn't happen on the Aussie. Very, very interesting in my book. I'll just refresh that for you. 2 bull bars, consolidation, massive breakout. That's Euro Kiwi, Euro Aussie, not so much. Yes, the 2 bars were there, got the higher low, but we didn't get the follow through. And that leads me probably not so much to trade Euro Aussie short more than I would Euro Kiwi, but doesn't it really open your eyes to Aussie Kiwi? Because the Aussie didn't go through, the Euro versus the Aussie didn't go through, but the Euro versus the Kiwi most certainly did, indicating to me that the Aussie is in a far stronger position at the moment than the Kiwi. And of course, we saw that last week with the breakout of this consolidation area. So I'd be looking very, very closely early in the week for a pullback on Aussie Kiwi so we can get into that long. And of course, those of you who are in Trading Buddies will know that we're looking to trade this break and retest of that rectangle there last week as well, and we didn't manage to find an entry point. I still got a little bit of a craw in my or a thorn in my craw about that, but maybe we can make up for that in the coming week. So at this point, that is my 2 cents worth.
Cheers, Geoff. Nice to wind the show up with a technician's 2 cents worth. I have a feeling that it's worth more than a couple of cents, honestly, mate. Always really accurate. Appreciate your input. Thanks for joining us today, and thanks to the Accidents to Wealth Online Training Profit team for doing this again. A magnificent job. And as I said, we've streamed this as one long event. We'll be cutting it into short sections and putting a heading on it so you guys can watch the specific stuff you want if you want to come and have a look later in the day. Thank you very much, guys. Thanks to the team, and thanks to everyone who's joined us for today. Have a great end of your weekend, guys. We'll see you during the trading week. See you, everyone.